Today's odds, 61%. That's the chance the market assigns to Kash Patel remaining director of the FBI until June 30th. Allegedly, the same as the ABV of his preferred beverage. Welcome to Prediction Market Prof. I'm Professor Benjamin Smart, and on this channel we analyse current affairs through prediction markets and test whether ordinary investors like us can profit from them. Today's market movers. Over the last 24 hours, yes shares in the Strait of Hormuz returning to normal traffic are up 7% as 19 ships pass through the strait on April 26th. Yes shares in US inflation hitting 4% by 2027 are up 15% as oil prices tick higher. And yes shares in a permanent Iran peace deal by July up 6% as peace talks are called off over the weekend. Today, we're doing three things. First, we're doing some whale watching. What are the biggest winners on Polymarket betting on? Second, I'll use those lessons to explain my new UK election trades, Starmer, Labour, leadership risk, and whether Labour gets dragged left by political gravity. Third, a quick Iran portfolio update. So today we're looking at the biggest winners on prediction markets, but we're going to discount sports. Not because sports traders are necessarily stupid, some are brilliant, some know more about the Dolphins' backup running back than they know about their own mother, but sports leaderboards are noisy. You get model grinders, syndicates, lucky lunatics, and people who bet the mortgage because a pigeon flew clockwise over Anfield. Respect, but not our edge today. We're looking for the politics and macro accounts, wars, leaders, central banks, peace deals, resignations, shipping lanes, and constitutional weirdness. The stuff where a good trader might not just be lucky, they might be reading the world better than the rest of us. Polymarket is useful here because you can see leaderboards and public profiles. Kalshi is a little harder. I can see leaderboard style data, but not reliable, recent, active positions for top accounts in a way that I'm happy to present as fact. That's the difference between this channel and a finance influencer. They say, my sources tell me. I say, my sources don't tell me, therefore my mouth is remaining shut. On Polymarket, the monthly politics leaderboard is packed with Iran-related winners. The top names I found included Deniz, the Spirit of Ukraine, UMA, Second Wind Capital, and Erasmus. And the pattern is fascinating. A lot of the biggest politics winners are not simply betting yes, apocalypse tomorrow. They're doing something more boring, and usually more profitable. They are betting against dramatic headlines when the market requires something very specific. Take Deniz. Large active positions include no on the US obtaining Iranian-enriched uranium by May 31st, no on the Iranian regime falling before 2027, no on the US invading Iran by 2027, and no on France, the UK, or Germany striking Iran by June 30th. Translation: this is not a man watching cable news and yelling, "It's all kicking off!" This is a man watching cable news and saying, interesting, the median viewer is overpaying for the trader. Same with the Spirit of the Ukraine, UMA. Big positions included no on the Strait of Hormuz traffic returning to normal by end of April, a trade that we've been obviously touting for a while, no by May 15th, and no on the US obtaining Iranian-enriched uranium by May 31st. That is the whale version of calm down, read the calendar. But not all whales agree. Second Wind Capital has a large yes position on the US invading Iran before 2027, while also holding the no position on Putin being out by the end of 2026. So the lesson is not copy the biggest account. The lesson is watch where the smart money accounts disagree, because that's where the information is. The biggest winners are not just predicting events, they are predicting resolution mechanics. Does the market require an announcement or the actual event? Does the source have to be official? Does the deadline mean local time, Eastern time, or whatever time a moderator is still awake? Does temporary reopening count? Does normal traffic mean normal politics, normal oil flows, or normal by the standards of a planet currently on fire? That's the edge. Prediction markets are not just about being right, they're about being right in the exact, annoying, lawyerly way that Polymarket pays for. Which brings us to Keir Starmer. So here's the UK trade setup. I'm interested in Starmer out contracts, Labour leadership risk, and the possibility that Labour gets forced left after the local elections. The thesis is not simply Starmer is unpopular. That's too lazy. The thesis is that the centre is being squeezed from both sides, and Starmer is standing in the squeeze zone wearing a high-vis jacket that says responsible government. Labour won a massive parliamentary majority in 2024, but only 33.7% of the vote. That is a landslide in seats, not a landslide in hearts. It's a first-past-the-post landslide, a constitutional optical illusion. And now the polling is brutal. The latest YouGov Westminster voting intention poll has Reform on 27%, Greens and Conservatives on 17%, Labour on 16%, and Lib Dems on 14%. More in Commons' April MRP says Reform could be the largest party if an election were held now, while the Greens could break through in urban Labour strongholds. So Labour is leaking both ways. Older, working class, immigration sceptical voters drift to Reform. In other words, they drift to the far right, the kind of Trumpian vote. Younger, angrier, renter, inequality-focused voters drift to the Greens, Independents, or to the left. And the centre says, we hear your concerns. The electorate says, can I buy a house? The centre says, we have commissioned a review. That is how parties die. The local elections are the catalyst. If Labour does badly, MPs get evidence. Not gossip, not vibes, not someone said something at a drinks reception, actual results. And if those results are ugly, the argument writes itself. Here, you won a huge majority, but the party is over. Reform is eating on one side, the Greens are eating the other. The country is angry about immigration, inequality, housing and living standards. We need a reset. And if he will not reset, then Labour may decide it needs a new leader. This is why I like the Starmer trade as a repricing trade, not necessarily a final outcome trade. The market doesn't need Starmer to be dragged out of number 10 in a wheelie bin. It needs pressure, panic, bad results, briefings, resignations, rumours, and MPs suddenly discovering their deep personal commitment to party renewal. Also, the poly-market Starmer rules matter. For some contracts, an announcement of resignation or removal before the deadline resolves yes, even if the actual departure happens later. That is classic rulebook stuff. The question is not just, will Starmer physically leave Downing Street? The question is, will he announce he is going? That's a much lower bar. And that's why I'm looking to take profits after the election if the June and December contracts spike. I don't need to predict the final chapter, I need to predict the next repricing. So, is there a far-left Labour leader trade? I did look for a clean far-left leader prediction market, couldn't really find one on Polymarket or Kalshi. Polymarket does have a next UK Prime Minister in 2026 market, where Angela Rayner is currently one of the leading named alternatives, but that only pays if the person actually becomes Prime Minister this year. So the trade may not be far-left Labour leader, it may be simpler. Labour performs badly, Starmer weakens, the party panics, the market reprices leadership risk, and that's enough. So why do I think that Labour needs to move to the left? Well, frankly, the deeper issue is inequality. Young workers look at Britain and see this. Their parents bought houses cheaply. Their grandparents got amazing pensions, 100% final salary pensions. Asset owners got 50 years of falling rates and rising house prices. And younger people got rent, student debt, worse pensions, and lectures about cancelling Netflix. Politically, that anger has to go somewhere. Some people blame immigration, borders, globalization, and elites. That pushes right. Brexit, Trump, reform, and the European right. Others blame landlords, corporations, inherited wealth, austerity, and asset inequality. That pushes left. And the centre gets absolutely battered. So if Labour wants to survive, it may need more than just competence. Competence is nice, but competence does not pay a deposit. That means wealth taxes, housing, pension fairness, lower rents, public investment, and the awkward question of whether Britain's economy is now a machine for transferring income from the young and working to the old and asset rich. Uncomfortable politics, but so is coming forth. Okay, so now a portfolio update. On Iran and the Strait of Hormuz, we've got an uptick in traffic. The crowd slightly increased its belief that traffic could return to normal by the end of May, and then we got 19 ships through the Straits compared with 5 just a few days earlier. That is not normal to normal, that is, the hostage has been allowed to text their family normal. But it matters because of the rules. The market doesn't require peace in the Middle East. It doesn't require everyone to hug, or for Iran, Trump, Israel, the US Navy, and oil traders to sit around singing Kumbaya. It requires for enough ships on enough days to pass through the strait. And that means the strait can return to rule book normal, even if the underlying conflict is absolutely not resolved. Maybe Iran needs the money and the US wants oil prices down, so both sides are willing to let a few ships through, and maybe a few ships is 60 every day for 7 days, which would mean that the market resolves no. So I'm partially closing some strait exposure and moving some into different markets. Trump declaring an end to military operations and a permanent peace deal. Because those are not the same trade. Traffic is traffic, a military announcement is political signaling. A permanent peace deal is actual diplomacy. A tank passing through Hormuz is not a peace treaty. It is just a very expensive boat having a surprisingly productive day. So, what are the winners doing? They are not just trading the news. They are trading the gap between the news and the rules. The public trades the headline, the sharp money trades the wording. As always, this is not financial advice. Do not copy whales blindly, do not copy me blindly, and never copy anyone whose username looks like it was generated by a toaster during a power cut. But do watch the best accounts, because sometimes prediction markets do not just tell you what people think will happen, they tell you which stories the public desperately want to believe. And right now, the edge might be betting against the story and not for the fine print. Like, subscribe, and tell me in the comments which whale accounts we should dissect next. I'll see you in the next one.